I was explaining computations.
Yeah, I think yes, bata 1 2 1 2. Though I'm not constantly following up, automatic settings here and there. I will do a follow-up planning. When I got the challenge, I will notify you. But so far, so good. And clarification.
No, that's fine. So I'm saying once we have done these computations, we now have to come to the portal, right? So on the portal, as I said, you are going under tax return management. Then you go to pending tax returns. So these returns are loaded by Zimra. Your job is basically to visit and submit the return. So as I said, this is based on the calculations. For income tax or corporate tax, you do what we term income tax provisional return. So you are doing the by the 10th of March, 25th of June, 25th of September, 20th of December, right? The rates, 10%, should be 10%, 25%, 30%, then 35%. So when you come here, you have already done your computations. The 11,000 that we got, it means you are going to distribute it that way. So you come here, you click your income tax provisional return, then you are now inputting the figures. So when you load this up, let me just drag this down. You could find what it does now. It gives you this. The first thing that you have to do is you have to select, okay, the period will be there, everything. You have to select, are you doing this for USD transactions only? In Zimbabwe, you understand we're dealing in a multiple currency environment. In other words, your income, you have income in ZWG, you have income in USD, in USD currency, right? So when you are doing your return, the system will ask you, is this return for USD only? Is this return for ZWG only? Or is this return for ZWG as well as USD? So you have to select. Then, is it a mine? If it is a mine, then you have to tick on mine. If it is not a mine, you then tick on other activities. So as long as the business is not a mine, you are ticking on other activities, right? If you don't put a tick there, you find nothing happens down here. You can't input anything. So you either select other activities or you are selecting mine, depending on what you are doing. Most companies are not mines. Right? Mines have got some special exemptions and everything and so on. That's why they are there, standing alone, right? So now, in our case, we've said we are doing a return for both USD and ZWG. This is based on our income statement, meaning to say, if we are dealing in both currencies, probably we should have an income statement for ZWG as well as an income statement for USD, so that when we come here, we're just inputting the figures, right? If we had selected one currency, probably if I had just selected USD, it means I'm just going to have one currency there. The same goes if we had just selected USD or ZWG, it means we're just going to have one column there. So I'm just going to probably use one column. Let me use one column, right? Then you are saying you input your turnover. What we are calling turnover, these are your sales. This is your revenue. So you're just taking this figure from your income statement. The annual, remember that. So you input that. Okay, I'm just going to input this. Right, I do not do an actual return, because if I do an actual return, so you could find this is turnover excluding VAT local. Then you turn over excluding VAT export. Now, if the company is exporting, it means you have to put the figure there. If it is not, you're just putting 0. Other income excluding VAT. If you've got other income, you may be receiving some rentals. Probably you've got some properties that you are renting out, or you are getting some other income from elsewhere. You just have to put the figure there. So these figures, again, I'm saying they will be coming from your income statement. It's wiser because you must have included everything here in this income statement, right? Then did you receive a share of profit? Probably you are invested in another company and probably you got a share of profit, right? Normally, if it is it could be a private company, it could be a public company, as long as you got something. So you see, once you add up these figures, and as I said, this will be coming from your income statement, because on this part with Zimra, we agree there is no harm on this part. So we agree. So you are just taking those figures and you are inputting them. So in this case, we would find we have total turnover excluding VAT of 210. Right? Then the system says, okay, of these sales, are they any exempt turnover? Is there any turnover which is exempt? Right? Most incomes for most companies in Zimbabwe, they are subject to income tax. So very few are not. So most of them are subject to that. If you are working for any business which is turnover which is excluded, you can put the figures there. So it will give you total exemptions there. Then you have total income after exemptions. Like then you have got your cost of sales, right? Again, we are saying we'll be taking this figure from your income statement. I'm just inputting these small figures because I don't want, if by mistake, if I do something, it means I won't be posting some large figures. So you are putting your cost of sales. This is, again, as I said, coming from your income statement. It will automatically compute and come up with a gross profit, right? Like in this case. Then you are coming up with these figures. Again, you are getting them from your income statement, director's fees and everything, right? So you input your director's fees. Director's fees, if you are paying director's fees, you must have paid a payee as in on that. Remember that. Then do you have foreign expenditure payments? Probably you are dealing with, well, probably you got a software from outside, or you got some consultants that was done for you. So you're just inputting. So these again will be in your income statement. And foreign interest payments, if you have got any, you're putting up that again. You're putting up that. What is that? That is, it is important up there. Then do you have your total employment costs? So these are your salaries and wages. You're then putting up that is right. Then the other expenses. So you could find from your income statement, you've got a list of expenses, marketing expenses, rentals, whatever. But when you come to your terms here, when you're doing a return, you are simply batching all the expenses, and the only ones that you are putting as standalones are director's fees, foreign expenditure payments, foreign interest payments. See, for most companies, you don't have this. You don't have this. But your salaries and wages, of course, you have. Then the other expenses, you are just putting up the total there. So it will compute and say, okay, these are your total expenses, net profit before local interest and tax. Then it gives you that. Then is there any local interest that you paid to banks? Probably you took out some loans and you are paying some interest. Then you put up the amount there, right? Then when you put up that, it will do a further computation, net profit before tax. Then it will show you the net profit before tax. In this case, the net profit before tax is a negative. I could make it a positive. Probably let me reduce this figure to $3 so let's say net profit before tax is that. Then if you are dealing in a business which has got trading stock, like probably are selling computers, you should have a value of your opening stock. So you put that. These figures, they will be available in your balance sheet. In your balance sheet, the value of your closing stock, you will have that, right? Then the opening value of assets excluding stock, you have that. That's where your balance sheet comes in. Did you have additional assets? Did you buy additional assets in the year? In the year, you are putting the total there, right? Then are they additional assets that you imported? You are putting the figure there. Then you have got the closing value of assets excluding stock. So the stocks, you are accounting for them up here on the first three tabs. Then the other assets, you are accounting for them on these other three tabs, right? Let me just bring up those figures. Then your capital total employed, that is your total shareholder funds. So this is from your equity. This is from your equity section, from your balance sheet. This is from your equity section. So you're taking up that figure from the equity section, then you are inputting it there. Right. Then you are done. Then the system does the computation, takes computation, net profit or a loss before tax is $3 in this case. Then the total non-deductible expenditure. So if you've got any deductible expenditure that you included here, up here on your expenses, right, you then have to come and put it down here. So here, what you are putting here, the figure that you are putting are your depreciation figures, because probably they are included in other expenses. So you are coming up here, you are including those depreciation expenses, let's say probably $10. Let me just put up that. So you would find, if I put this, if I put the non-deductible expenditure, my profit becomes $13. Right? Then add any recoupments. What we are terming recoupments, you remember, when I spoke about capital allowances, I said, let's say probably you selected or elected to use special initial allowance. What it means is you may have claimed all your depreciations, 50%, 25%, then 25%. Then for some reasons, that asset you managed to sell it, which means you got a profit. So instead of profit, it's called recoupment or recoupments. So you have to put the figure there. So again, it will increase the taxable. Okay, Zimra had given you the capital allowances for that, but you managed to sell it for a profit. So that profit has to be taxed. And Zimra doesn't call that a profit. It calls it a recoupment or recoupments. So we put that. Then you find you have got an adjusted net profit or loss before tax of $18 in this case. Then you come to your deductions. Now, on your deductions now, you are now putting the capital allowances, which I spoke about. You must have computed the figure. So let's say probably it's $3. I'm just putting up these figures so that you understand the concept. Then we've got what we term scrapping allowances. Okay, let's say the asset, you were depreciating the asset using the capital allowances. You claimed 50%, you claimed 25%, and for some reasons that asset was damaged and you had to write it off before claiming the other 25%. If we were using special initial allowance, it means you made a loss on that. So that loss, you can actually claim it under scrapping allowances. So let's say probably we've got a scrapping allowance of $1. Then any non-taxable income, you could put it up there. See, the system will be computing. So it will subtract the capital allowances, it will subtract the scrapping allowances. Then you have your taxable income or loss of that much. Then do you have a loss from previous years? You may have computed and you suffered losses previous years. These are tax losses. You put up the figure there. If you have got none, you just leave it as it is. Do you enjoy special rates? If you do, you say yes. If you don't, you say no. Right? These are special rates. Zimra must have authorized you to use different rates from the standard rates. So it's not like you are guessing. You must have got this authorization from Zimra. Are there any tax relief that you got? You put up there. Are there any tax credits that you got? You put up there. Then the system will calculate. This is the tax due after tax credits. So this is your tax due. Tax chargeable, then it gives you that after putting up as levy. So this is the tax payable. Then it does the final computation. It breaks down. The tax payable is $3.60 broken into income tax plus your as levy. Then down here, you just click on calculate. On your QPDs, you find it's going to show you the amount to be paid. So it will show you the first QPD, the second QPD, and so forth and so on. Then down here, if you traded during the year, then you say, if you traded, you say yes. Of course, you traded. Did you pay rent? Do you own the premise that you operate from? If you own it, you say yes. If you don't, you say no. Right? Then, of course, if you say no, you then have to put the name of the lessor, the person that is you are renting from, their TIN number, the ID number, contact address, and all the other details. Then the amount paid, you put the amount that was paid. If you own the property, you say yes. So you won't have to put all those details. So you just say yes, like that. Then once you are done, you submit the return. So when you click submit, automatically this QPD is loaded up and it's sent to Zimbabwe. So this is how you do these are what we term QPDs for short. We are saying QPDs for short. The issue is you must have computed your figures so that when you come here, you are not guessing. You are taking from this income statement in the other computation which I showed you. Remember the other computation which I was doing in Word. So it's this plus that. Then you come, you do your return, then you submit to Zima. So this is how you do your QPDs. I don't know if it has been clear or if there are any questions that you may have. I want to end here. Then tomorrow, I want to consolidate and look. I'll be sort of continuing, but I want to look now, because as I said, you would find when you come here, under pending returns, all right. Let it just allow me to come back to pending returns. You have got the QPDs, then you have got the income tax self-assessment return. So we also want to look at this so that we are complete. But are there any questions that you may have or something that you may say, okay, it's not clear? I don't know, probably when you look at it later on, we may have questions. We may go over it again tomorrow because you have to fully understand this, because it's part of your tax management. When you're managing the books of a company, this is one area that you have to be very good at so that you don't have problems with the Zimbabwe Revenue Authority.
Okay, if any questions arise, especially when I'm calling at by that time, the open one said I pay my attention. I think I will get that chance. By the end of the day, I will notify you.
No, that's fine. All right. So what I'm going to do, I'm stopping here for today. I'm going to upload these videos. You look at them. Then tomorrow, before we continue, we just go over it. As I said, this is now practical. This is something that you have to master because it's an area, whichever way, it's an area that you work with. Because this is applicable to every company. It's different from value-added tax. This is applicable to every company. So it's okay. I'm going to upload, then I'm going to share the links. Then we continue. Tomorrow.
Okay, so thank you. I will do a follow-up.
All right, thank you.
So when you upload the videos, kindly share the links so that I can do a follow-up whenever I get to.
All right, thank you.
Okay, have a good day.
Okay.